I mean, the future of the Bitcoin protocol is determined by all the holders, all the miners, all the exchanges. Like there's it's a very, very diverse ecosystem. You know, the Chinese, the Russians, the foreigners, the Americans, every possible business, every possible holder. You know, even the regulators, they all have some say one way or the other. And the truth is, the reason Bitcoin works is because nobody wants to change it.
MicroStrategy CEO Michael Saylor, a prominent Bitcoin advocate, has addressed the implications of Bitcoin's recent dip below the $100,000 mark. While this decline has raised concerns about the cryptocurrency market's dynamics, Saylor emphasizes that Bitcoin's decentralized, immutable, and borderless nature ensures its resilience. Bitcoin functions as a decentralized financial system governed collectively by a global network of stakeholders, including individual holders, miners, exchanges, businesses, and regulators. This interconnected ecosystem prevents any single entity, MicroStrategy included, from unilaterally influencing or altering its protocol. Saylor highlights Bitcoin's immutability and decentralized consensus mechanism as the keys to its enduring success. The system's resistance to change guarantees security, censorship resistance, and adaptability, even under external pressures. Modifications to Bitcoin's protocol require broad global consensus, safeguarding its foundational principles and integrity. While short-term price fluctuations may impact market sentiment, Saylor argues that these changes do not undermine Bitcoin's governance or its role as a digital store of value. Instead, such movements provide opportunities to reflect on its long-term potential in a world increasingly valuing digital sovereignty and decentralized financial systems. For Saylor and other Bitcoin proponents, the recent dip reaffirms a fundamental truth. Bitcoin's strength lies in its ability to maintain stability and trust amid market volatility. This resilience is rooted in the collective commitment to its unchanging principles, ensuring its place as a cornerstone of the digital financial future.
Hi guys, hope to see you guys at Dubai Token 2049. We have exclusive 10% off the limited super early bird tickets. Click the link below. This pass will grant you access to speaking sessions, networking app, exhibition hall, daily networking drinks, and also included breakfast, lunch, and coffee breaks, all included the package. I love to see everyone there. Peace out.
Study the Black-Scholes equation, you notice that if the volatility goes to zero, the options are worthless. So, for example, if you calculate the call rate, if you hold $1 million of USD and for 30 days, you're getting an annualized interest rate of SOFR, about 4.8%. If you hold $1 million of the S&P index, you're getting like 15%. If you hold $1 million of IBIT, before the options market on IBIT, you couldn't get anything. But just in the last month, when the options came alive, you can get like 80 to 100%. And with MicroStrategy, you could get 200%. So the volatility actually creates a really strong call rate. I mean, it attracts the hot money and the traders, and that's what creates the options market. And without the volatility, you can't sell a convertible bond. In order to sell a convertible bond, you need a volatility of more than 45. The S&P is 15. So if you're holding the S&P index or real estate or gold or bonds, you can't sell convertible bonds. But if you're holding Bitcoin, which is 60 vol, or if you lever Bitcoin, and we lever the Bitcoin to get to 120 vol, we can rinse and repeat that trade. We can, in essence, issue $1 billion in convertible bonds, buy Bitcoin, wait a month, do it again, wait a month, do it again, wait a month, do it again. So we're the most prolific issuer of convertible bonds in the world because we're the ones that have the best use of proceeds. What do you want? You want you want the thing you invest in to go up faster than the S&P index, and you want it to stay volatile, more volatile than the S&P index. And there's only one commodity in the history of the world that checks both of those boxes, and that's Bitcoin. And if you were risk adverse and if you diversified it, if you basically had half Bitcoin, half real estate, or half Bitcoin and a bunch of bonds or whatever, the volatility dies and the performance dies, the fire goes out, and you can't keep raising capital. So MicroStrategy has gone 100% Bitcoin, and we're pursuing all those various capital markets. And There's just large pools of investors that they need to buy. The people that trade equity want equity. The people that trade options need the options, and the people that trade the convertible bonds need the bonds. They can't buy Bitcoin. They don't want Bitcoin. They really want the other instruments. And so we provide them that security they need. I think every company in the world should recapitalize on Bitcoin. So like that's 400 million companies. So I think all 400 million should. I think every family, every individual should. I think every government should. I think Microsoft should recapitalize on Bitcoin. I think your bakery should. I think all the Bitcoin miners should. So yeah, everybody should recapitalize on it, right? You're talking about capitalizing on an asset that's 60% ARR, 60 vol, instead of an asset, the US dollar, that's 0 ARR, 0 vol. Another way to say it is, I think we ought to put an internal combustion engine in every horseless carriage. I think we ought to put a gasoline-powered engine in every house, every plane, every train, every automobile, every factory, right? I mean, I want to put a fire in every vehicle on the planet. That's what Henry Ford did. That's what John D. Rockefeller did. They put a fire in everything. And I think you could think about this as a crypto reactor fueled by Bitcoin. Bitcoin's the fuel. It's a crypto reactor. We should put one in everything. Now, in terms of the business model, let's think about the generic idea. The generic idea is you have assets. If they're going up 0% a year and the cost of capital is 15% a year, you're losing, it's minus 15% a year. Your capital is being destroyed. So that's the US dollar treasury strategy. The Bitcoin strategy is plus 45% versus the cost of capital. So everybody can do that. Meta, Apple, Microsoft, Disney, everybody can do that. Every Bitcoin miner.
Michael Saylor argues that Bitcoin's volatility offers a unique and lucrative opportunity for businesses and individuals to capitalize. He references the Black-Scholes equation to highlight that assets with low volatility, like the US dollar, provide minimal returns. In contrast, Bitcoin's 60% annual volatility enables significantly higher profit potential. Saylor explains how companies like MicroStrategy leverage this volatility by issuing convertible bonds, an approach that traditional assets like real estate or the S&P index cannot support effectively. Saylor also advocates for Bitcoin miners to prioritize Bitcoin as a capital reserve rather than investing heavily in depreciating mining hardware. He notes that while Bitcoin's productivity increases by 60% annually, mining equipment typically loses 60% of its value due to depreciation and diminishing returns. He extends this criticism to traditional investments in assets like Nvidia chips, which also face depreciation. Instead, he suggests that publicly traded companies should sell equity and debt to acquire Bitcoin, positioning themselves for substantial profit growth. This strategy, Saylor asserts, transforms Bitcoin into a wealth-generating crypto reactor. By leveraging its volatility and long-term appreciation, businesses can achieve significant financial growth. His insights underline Bitcoin's potential as a transformative asset, offering opportunities that traditional investment vehicles cannot match.
The more important point is every Bitcoin miner should recapitalize to Bitcoin. That's the important point, right? The big idea is there's like 20 publicly traded miners. When you raise $1 billion and you buy Bitcoin mining equipment, you're buying hardware which is depreciating 20% a year physically, where it's getting 20% a year less profitable because of the hash rate, where it's getting 20% a year less profitable because of the protocol, or 10%. So you're buying something that is minus 60% a year in productivity. You're investing in an asset which is losing 60% a year in productivity. When you buy Bitcoin, you're investing in an asset which is increasing 60% a year in productivity. So it's a very simple idea. Why would you burn 60% of your money every year, throwing it into a competitive hardware business where the protocol is taking you to zero, when you could increase your capital by 60% a year by simply buying the asset which the entire world wants? So that's what Mara is doing. That's what Hut 8 is going to do, right? That's what all the enlightened miners are doing. I think the fiat miners somehow think it's better to invest in data centers or invest in hardware. And by the way, you could say, well, we're going to switch to Nvidia chips. The only difference between NVIDIA chips and Bitcoin mining chips is NVIDIA is depreciating 20% physically because it's burning out and obsolescing, and then another 20% depreciation because of competition. So instead of minus 60% a year, it's minus 40% a year. And so I think that if you're in the crypto ecosystem and you're a publicly traded company, you ought to recapitalize the Bitcoin. You should sell equity and you should sell debt to buy Bitcoin. You're going to make money. You'll rinse and repeat. You're going to go from a $5 billion or $2 billion business to 10 billion, 20 billion, 40 billion, 80 billion, 160 billion. That is the Bitcoin way. The fiat way is you're going to invest in expensive electricity, expensive data centers, and depreciating NVIDIA chips or in depreciating in Bitmain chips. And that's basically taking you to zero, right? And that doesn't really make a lot of sense. Now, every other company in the world, every zombie company, every restaurant, every hotel, every travel company, every airline, every whatever, they've all got a US dollar capital structure. It's like you got a wood-burning stove in your house, and I'm telling you, put a crypto reactor and fuel it with Bitcoin, and you'll have unlimited clean energy forever. And the most useful thing we could do is get that word out and get people to wrap their head around the idea of a crypto reactor on your balance sheet where Bitcoin is the fuel. And if you do that, then your balance sheet becomes a wealth-creating asset.
Bitcoin recently dipped below the $100,000 mark, trading at approximately $97,700 after peaking at $100,000 last week. This decline is primarily attributed to profit-taking by long-term holders, who have seen average gains of 326%, and concerns about Bitcoin's security following Google's advancements in quantum computing. Liquidations have surged, wiping out over $1.7 billion in the past 24 hours, including $1.55 billion in long positions. The market is particularly focused on Google's quantum computing chip, Willow, which has raised fears about its potential to crack Bitcoin's cryptographic protections. However, experts agree this technology remains years away from posing a genuine threat, emphasizing the need for quantum-resistant Bitcoin systems. As the market faces these uncertainties, attention shifts to key U.S. economic indicators, including the Consumer Price Index, Producer Price Index, and jobless claims. These reports could impact the Federal Reserve's interest rate decisions. With an 85% probability of a rate cut, Bitcoin might benefit from a lower interest rate environment, which boosts liquidity and risk assets like BTC. Despite the recent dip, Bitcoin remains in an uptrend, trading above its rising trendline and 20-day simple moving average after breaking out of a 7-month falling channel. However, its failure to sustain the $100,000 level raises concerns about fading bullish momentum, as bearish divergence on the relative strength index suggests possible downside risk. If Bitcoin breaks below its 20-day simple moving average, prices could drop further, potentially testing support levels around $94,000 or even $85,000. Still, some analysts believe buyers may make another push for the $100,000 mark. As Bitcoin continues to evolve, many wonder whether its annual productivity growth of 60%, outpacing traditional investments, makes it a viable option for companies, families, and governments to recapitalize. What are your thoughts on leveraging Bitcoin's volatility and growth? Share your perspective in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.